Why do some retirees lose everything just because they bought the wrong house in Florida? Why could the home you're about to buy, just 6 months from now, lose hundreds of thousands of dollars? And why can the promises of a retirement paradise turn into the most dangerous financial trap at age 50 plus? Today, I'll reveal to you 10 real estate markets in Florida that are collapsing faster than you think. Not by gut feeling, not by rumor, but by real data, real numbers, and real consequences that many people are suffering. If you're thinking of buying a house in Florida, this video is your sanity check. If you've already bought, watch and see if you're sitting on a financial time bomb without even knowing it. Don't miss a single second, because just by skipping through, you could miss the most important warning for your future. Are you ready? Come with me and verify each market right now. 10. Petersburg. When the retirement dream turns into a financial nightmare, you've spent your whole life working, saving, and cherishing the dream of a peaceful retirement under Florida's sunshine. But if that dream is called St. Petersburg, you need to stop and face the truth. The place once seen as a retirement paradise is now becoming the most dangerous financial trap for older adults. In just 1 year, the median home price in St. Petersburg has fallen from a peak of over $418,000 down to about $395,000, a 5.5% drop. The time it takes to sell a house has also gotten longer, averaging 60 days instead of 43. And most homeowners only sell for around 95% of the asking price. These numbers may look small, but they signal a clear reversal, from a seller's market to a buyer's market. And in that transition, the ones losing the most are those who poured their entire life savings into settling down here. The cost of home ownership in Florida in general, and in St. Petersburg in particular, is rising at a worrying pace. Home insurance premiums are skyrocketing, with nearly 3/4 of homeowners saying they're paying more or having their coverage reduced. HOA fees keep climbing, in some places rising over 15% per year, especially in areas near Tampa. Mortgage interest rates remain around 6 to 7%, making long-term loans a crushing burden. For retirees living on fixed incomes, these are expenses that eat away at every dollar of pension, every bit of savings, and even their peace of mind. The reality is exposing untold pains. A retired couple bought a house for $550,000 in 2022, but by early 2025, they were forced to sell it for only about $391,000, losing nearly 28% of its value in less than 3 years. They could no longer afford the insurance premiums that had nearly doubled and had to leave what was once seen as their final destination. That story is not an exception. It is becoming more common than ever. On top of that are the threats of nature and the insurance crisis. About 45% of properties in St. Petersburg face severe flood risk over the next 30 years. Insurance companies are simultaneously pulling out of the Florida market, leaving many people unable to buy coverage or forced to pay exorbitant rates. Homes in low-lying areas that flood regularly are being left on the market with deeper and deeper price cuts. When disaster strikes, those living there may lose not just their money, but their very shelter. Meanwhile, housing supply in St. Petersburg has surged, following the construction boom of 2021-2023. Numerous new housing projects have been completed, but failed to find buyers, forcing developers to roll out incentives such as lowering mortgage rates, offering free furniture, or even selling at a loss. The market is flooded with choices, but buyers are fewer, an ideal situation for bargain hunters, but a risky one for those already owning. Finally, demographics, once the lever pushing prices up, are cooling down. The inflow of new residents to Florida dropped significantly in 2024-2025, no longer strong enough to drive demand as before. For St. Petersburg, this means a market losing its momentum. The illusion of stability is being stripped away. Are you thinking about retiring in Florida? Ask yourself, are you willing to trade financial security for a fading dream? Share your thoughts in the comments. And if you found this information useful, don't forget to hit like and subscribe to stay updated with the earliest housing market warnings for people over 50. Petersburg was once a dream, but in 2025, it is becoming a wake-up call. 9. Lakeland, Florida. When one of the hottest markets starts to crack. A new report from Norada Real Estate has placed Lakeland as the second riskiest housing market in Florida, predicted to crash if economic conditions fail to recover. This is not some distant forecast. Lakeland is already showing real changes, and they are more dangerous than you think if you are retired or preparing for retirement. Lakeland once thrived from the pandemic-era migration wave. People from colder, larger states flocked to Florida for warm weather, low taxes, and a laid-back lifestyle. But in 2025, headwinds have begun to blow stronger. The median home price in Lakeland now sits around $311,150, down 3.7% from a year earlier. The number of days it takes for a home to go pending has also stretched, about 40 days compared to much faster times in the past. Inventory is climbing, while the number of homes sold has dropped significantly year over year. For example, by the end of August 2025, Lakeland had roughly 1,176 homes listed for sale, with only about 275 new listings, showing that supply is piling up from older unsold homes rather than from hot new inventory. Meanwhile, the sale-to-list ratio has slipped below the ideal mark. Many homes require multiple price cuts before finding a buyer, or buyers are negotiating much more aggressively. You may have already put down a large payment, borrowed money. And if your home value drops 3–5% in just a year, you've lost not only financial equity, but also much of your emotional investment. For those on a fixed income, such a loss can wreck retirement plans. From selling a home to move closer to family, to providing financial support for children or grandchildren. With homes sitting on the market for 40–60 days or longer, carrying costs, taxes, insurance, maintenance, and HOA fees if applicable, keep piling up while the real value of the asset slips or stagnates. If you were counting on real estate as your safety net for old age, Lakeland may no longer provide the security it did a few years ago. With fewer buyers, sellers must accept discounts, but older homeowners, especially retirees, often can't adjust quickly to those realities. Lakeland may not be a coastal market directly battered by hurricanes like St. Petersburg, but living costs, mortgage rates, and insurance premiums are still climbing. When the benefits of low taxes and warm weather are outweighed by rising financial risks, retirees need to rethink carefully. Lakeland now stands at a crossroads. If you've already invested or plan to buy here, you may face a reality of waiting longer, paying more, and earning less than expected. 8. Northport, Florida. When the market stands on burning ground. Northport, once tied to the hope of peaceful living and affordable housing, is now becoming the epicenter of Florida's housing market decline. In just 12 months, the median home price here has plunged nearly 10%, one of the steepest drops in the entire state. For those who poured their life savings into settling here, that number isn't just a statistic, it's a real loss. Lost equity, broken retirement plans, and for many older homeowners, the erosion of their last sense of financial safety. The inventory problem in Northport is turning critical. Supply has surged while demand has stalled, leaving the market oversaturated. Nearly 1/3 of all listings have had to slash their asking prices in just the past 2 months. Homes that were once dream houses now sit on the market for weeks, some for as long as 3 months, without serious buyers. The building frenzy during the boom, with projects sprouting up everywhere, has backfired, creating a glut of supply that forces sellers to accept painful losses. But that's not all. Insurance costs in Northport, even though it isn't right on the coast, are spiraling out of control. The fallout from repeated storms and a chaotic insurance market has forced homeowners to pay premiums that have doubled compared to just a few years ago. Add in rising HOA fees, property taxes, and ongoing maintenance costs, and the financial strain quietly eats away at household budgets, especially for retirees living on fixed incomes. The biggest risk for middle-aged and older homeowners in Northport isn't just falling home values. It's the possibility of being forced to sell in a frozen market. As age brings unexpected changes in health or finances, many may need to move. But in today's conditions, selling quickly without taking a loss is nearly impossible. Some have had to cut tens of thousands of dollars off their asking price just to escape the crushing weight of insurance, taxes, and maintenance. And if you're thinking lower prices will attract buyers, think again. Buyers are more cautious than ever. They know the market may drop further. They fear skyrocketing insurance costs and harsh weather. And they have more choices than ever in safer, less risky areas. Northport, with its large inventory, potential for further decline, and rising living costs, is no longer the affordable retirement haven it once was. Have you ever considered Northport as your retirement home? Or are you already living there, feeling the daily financial squeeze? Share your experience in the comments below. And if you found this information helpful, don't forget to hit subscribe to stay updated on Florida's latest housing warnings. 7. Cape Coral, Fort Myers. When the seaside paradise dream turns into a real estate nightmare, Julie and Tim Gaines poured their hearts and savings into buying a dream home in Cape Coral 3 years ago. A pool, vaulted ceilings, fine wood interiors, picture perfect, just like a catalog ad. They dreamed of peaceful mornings on the balcony, distant waves, and warm sunlight flooding through the windows. But by 2025, that same home, once bought for over $675,000, had to be slashed below $500,000, a drop of more than $175,000, and still couldn't find a buyer. No warning was big enough to prepare them for this plunge, and they're far from alone. Cape Coral was once a land of promises. Home prices skyrocketed during the pandemic. Buyers rushed in, sometimes buying blind through photos and videos, pushing the median price up nearly 75% in a short period. But now, the cost of that overheated growth is a series of overlapping bottoms. Over the past 2 years, the median home price in the Cape Coral-Fort Myers area has dropped about 11%, erasing much of the gains early buyers once made. Then came the ballooning supply, like an overinflated balloon ready to burst. New homes flooded the market as developers kept building while demand was still hot. But when demand cooled, neighborhoods filled with unsold homes. For sale signs lined the streets. Some communities sat eerily quiet. Open houses went unattended. Many pandemic buyers are now underwater, owing more to the bank than their homes are worth. That rate sits at nearly 8%, the highest among major U.S. metro areas. Insurance costs and natural disaster risks, especially hurricanes, are the hammer striking this dream home. Storms like Ian sent premiums soaring, not just annual costs but also repair bills, forcing many older homeowners to reconsider their future each storm season. Clearly, living by the coast isn't just about sunshine and breezes. It's about enduring every risk that nature and the market throws at you. For retirees, those who want stability and the option to sell quickly if health or family needs change. Cape Coral may be a dangerous gamble. The market is slow. Buyers are hesitant. Selling often means losing money. Meanwhile, the ongoing costs, insurance, storm protection, repairs, property taxes, and mortgages keep climbing. And retirement savings don't always stretch far enough to carry those burdens if home values keep sinking. Have you ever heard an older friend or relative say, "I lost too much when I sold my home"? If you're looking at Cape Coral as your retirement or vacation choice, ask yourself, can you really stomach another 10–15% drop if the trend continues? If you find this information helpful, hit subscribe so I can keep updating you on the places that are falling like rocks and the ones still relatively safe for people over 50. 6. West Palm Beach, Florida. When the coastal race changes direction. One morning, Linda, 65, opened her window to the bay. She listened to the waves, felt the morning sun, imagined a peaceful Florida seaside, but instead of a sunrise, she saw a sea of homes for sale. For sale signs popped up more often than flower pots on the porch. The coastal dream no longer sparkled like the ads. West Palm Beach is shifting, and it's not a gentle shift. Home prices here once surged, but 2025 is showing signs of reversal. The median price now sits around $398,000, $425,000, down about 4 to 5% year over year across many segments. The average time to sell is longer. Homes no longer sell in a few weeks. They take months, even over 100 days. Buyers are no longer rushing. Sellers are forced to wait longer and accept deeper cuts. Inventory, homes listed for sale, has climbed to the highest level in years. Expensive homes, beachfront properties, or houses in pricey HOA communities. Everywhere you look, signs saying price reduction coming or list price too high compared to actual sales appear often. Home insurance, property taxes, hurricane-proofing upgrades, coastal maintenance, all are pushing ownership costs higher than before. For older people like Linda, these risks aren't theoretical. If you want to sell to move closer to your children, if health no longer allows, you might not be able to sell quickly without taking a major loss. If your retirement budget was built on the assumption that home values would keep rising, now is the time to reset expectations. West Palm Beach may still be beautiful, still livable, but it's no longer a sure bet if you're buying property with retirement in mind. 5. Tampa, Florida. When a hot market starts sweating hard. In Tampa just a few years ago, people shouted its name as the destination of the future. Beaches, jobs, low taxes, newcomers flocking for opportunity. But by 2025, hot has turned into burnt out. The fire of the housing market is dying, leaving ashes, and latecomers are paying the price. The median home price in Tampa was just recorded at about $405,000. That's nearly a 10% drop year over year in many housing segments. Homes that haven't been renovated, homes in outlying areas, or resale properties from longtime owners, all are being slashed deeply to find buyers. Average time on market that used to be 30–40 days has stretched to 40–60 days, and nearly 29% of listings have had to cut their prices at least once to attract offers. Inventories, the number of homes waiting for buyers, are up, giving buyers more choices than before. Gone are the days when people fought over the best homes as soon as they were listed. The market has shifted, from sellers holding power to buyers having time to browse, negotiate, and push prices down. Insurance costs, disaster repair expenses, HOA fees, if any, property taxes, all are rising, cutting into potential profits for those who want to invest, or those who want to live peacefully on a fixed retirement income. Especially for those 50 plus, the painful truth is clear. When you want to sell to move closer to family, or relocate for health or convenience, Tampa is no longer a market where you can flip fast. If you need quick liquidity, you may have to take a loss, or accept selling at a lower price. If you hold longer, maintenance and insurance costs will eat into whatever thin profit remains. 4. Winter Haven, Florida. When outsiders leave, home prices pay the price. Imagine, you move to Winter Haven lured by promises of affordable prices, close to Orlando, a relaxed lifestyle, thinking you're investing in a home that will safely hold its value. But when the flow of out-of-state buyers, the main driver that pushed prices up, slows down, the market starts to show cracks. Falling prices, more for sale signs, the once hot buzz turning into correction pressure. Winter Haven now appears on the list of markets considered very high risk for home price declines in 2025. Reality confirms it. The median home price here has already started to slip compared to last year. It's not a sudden collapse, but enough to sting, especially for recent buyers. The median price is about $320,950, down from the peaks of the hot years. The market is showing signs of stress. Homes sell more slowly, listings stay longer, and many sellers are forced to set lower prices than expected to attract buyers. A major risk. Winter Haven relies heavily on people moving in from other states, seeking cheaper housing and warmer weather. But from 2023 to 2024, this migration trend has clearly slowed. With fewer new buyers, homeowners who want to sell or relocate, for health, for family, or to cut costs, face a market with fewer buyers, more competition, and the need to accept losses if they want to sell quickly. For those near or already in retirement, the problem is simple but painful. When you want to sell to move closer to your grandchildren or to lower living costs, Winter Haven may be the place where you get stuck. A low liquidity market, meaning hard to sell quickly or requiring a deep cut if selling fast, is a major worry. In addition, maintenance costs, disaster-proofing expenses, even though Winter Haven is not right on the coast, and rising insurance premiums, all are factors not fully considered when you dream of an ideal retirement life. 3. The villages. When the retirement paradise starts to echo with the hiss of risk, the famous retirement community, golf courses, clubs, social activities, the villages was once the pinnacle of the dream to finally settle down in peace. But since mid-2024 to 2025, the glossy ads of swimming pools and golden autumn streets can no longer hide the reality. Home prices are slipping, buyers are fewer, and monthly costs keep climbing. The current median home price is about $398,164, down roughly 2.5 to 3% compared to the same time last year. The market is clearly slowing. It now takes around 49 to 60 days for a home to go pending, much longer than before. More homes are being listed, new builds, older homes, properties in amenity-rich communities, even in the 55-plus segments, all facing tougher competition. For the majority of residents, who are retirees living on fixed incomes, financial pressure is coming from every direction. Record-high homeowners insurance, property taxes that keep climbing based on past valuations, even as prices drop now, maintenance, community amenities, HOA fees. When income doesn't keep pace, every roof repair, every window replacement, even simple yard upkeep can disrupt a retirement budget. And here's the heart of the problem. Retirees usually place their trust in stability. They want to live peacefully for the rest of their lives. They want their homes to at least hold their value. But the Villages is showing that holding value is no longer guaranteed. Not if mortgage rates stay high. Not if insurance keeps rising. Not if buyers keep waiting for further discounts instead of stepping in now. 2. Punta Gorda, when strong winds blow away value. Punta Gorda, a picturesque city on Charlotte Harbor, but today, it's facing the fiercest headwinds in years. The median home price? Just about $325,000, down 14.5% compared to last year, one of the sharpest drops in all of Florida. Behind that number lies a reversal. After the pandemic frenzy, when buyers rushed in for a peaceful corner by the sea, but this paradise sits right in the eye of the storm. Literally. Climate risks, major hurricanes, flooding, rising tides, all driving insurance costs to record highs. Some insurers have stopped issuing new policies altogether. Buyers are hesitant. Retirees are worried. And the greatest fear? Not just losing a home in a storm, but losing the ability to resell in a declining market. Punta Gorda is not the place for you if you may need quick liquidity in case of health or financial emergencies. If you choose this city for retirement, make sure you have the reserves to hold on for the long haul. 1. Naples. When $1 million paradise loses value by the day. Naples, the symbol of luxury, of high-end resort real estate, but today, it's facing the steepest drop in the entire state. Median home price, just $767,800, down 19.2% from last year, from peak glory in 2020-2022 to a harsh reality now. The bubble has burst, and the correction may not be over. Naples relies on wealthy buyers, on investors, but rising interest rates, economic uncertainty, have cut demand sharply. Inventory is soaring. Buyers hesitate. $1 million villa? It can lose hundreds of thousands in just 1 or 2 years. And the costs don't stop there. Insurance, property taxes, maintenance, among the highest in the nation. Naples is not for those who seek stability, not for those who want to safeguard retirement savings. Unless you're truly affluent and ready to shoulder big risks, it may be wiser to look for a safer harbor for your golden years. Florida is no longer the promised land for everyone. Prices falling, costs rising, risks everywhere, especially for older adults. Don't rush into buying just because you heard it's good. Stay alert. Double-check every detail. Because one wrong step now could cost you your entire retirement. Have you lived in these places? Or thought about buying there? Share your experience in the comments. And don't forget, like, subscribe so you don't miss the next video. Safe retirement living is not for the hasty.